Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Today, we're going to take a look at a Kentucky hemp company that has more than $100 million in debt. They're going to file bankruptcy. High Times also has $100 million in debt, by the way. And so on the back of Tilray and Aurora laying people off, kind of have to ask the question, will some struggling U.S. cannabis companies look to the Canadian marketplace for a possible bankruptcy protection? So out of this article from the MJ Business Daily, capital constraints are a growing factor for cannabis industry. So U.S. cannabis companies are facing financial pressure, and they're increasingly eyeing the Canadian bankruptcy protection as a possible solution to their problems. That's because it's federally illegal in the U.S. as a Schedule 1. You cannot file bankruptcy. So a lot of these companies just have to give up everything, or if there's lawsuits, they're personally liable, and there is no bankruptcy protection or reorganization. So some U.S. firms are looking north, where cannabis companies are allowing to seek such legal shelter from creditors. It won't be easy to look for bankruptcy protection in Canada. As a partner at a New York-based investment group, Navy Capital explains, cross-border insolvency cases are highly complex. Layer on cannabis and you have a uniquely challenging process for everyone. Canadian bankruptcy might provide an option for U.S. businesses that have Canadian operations, or they might go down such a route if their stocks are listed on an exchange such as the Canadian Securities Exchange, but multiple caveats exist. So a different partner at a banking, financing, and insolvency group of Toronto-based Torkin Mains said that a Canadian listing is not sufficient in and of itself. The debtor company typically needs to be a Canadian corporate entity and have the majority of its business operations in Canada. So the devil's in the details. For example, where were subsidiaries formed, which ones are operating entities, and which ones are actually insolvent? If a cannabis company has operations in the U.S., the hurdle of overcoming U.S. bankruptcy courts would remain even with a successful Canadian bankruptcy case. One of the biggest determining factors is where is the revenue based out of. So in order to qualify for that, you'd have to have most of your revenues being generated in Canada, with the entity being Canadian. So a lot of U.S. companies aren't just going to be able to go up there and file for business and a license and then bankruptcy protection. It's not how it works. So just to qualify for, like Puerto Rico's Act 20, for example, in order to qualify for their 4% corporate tax cap, you need to have your operations and, of course, your sales generated from Puerto Rico in order to avoid paying 20% corporate taxes at the federal level. Of course, Puerto Rico's a U.S. territory, but they don't have congressional representation, can't have taxation without representation. And so that's how you're able to get away with the 4% corporate tax cap instead of a 20% like everyone else is paying. But again, that also requires that all of the revenue and sales go through that entity in Puerto Rico, very much in the same way that to file a bankruptcy in Canada, you need to have an entity in Canada with the sales and revenue being generated from that Canadian entity in order to qualify. So, fairly normal. So let's dive into this question. Are the layoffs a major signal for industry-wide problems overall? There's a trend with the cannabis industry starting in 2019 that's accelerated into 2020. So looking at MedMen, they're cutting more than 40% of its workforce. Pasha Brands reducing its team by 24%. Zenabis terminating 40 people. Gencana is giving the boot to another 65. Mile High Labs discharging 10%, and Leafly 18%. So in the latest moves, Tilray announced this week that it fired more than 140 people, or 10% of its workforce. And then Bloomberg reported that Aurora Cannabis would be doing the same, cutting about 340 jobs, including the CEO. Tilray's CEO, Brendan Kennedy, said it's part of a company-wide restructuring focus on driving continued growth. By reducing headcount and costs, Tilray will be better positioned to achieve profitability. If they can get their cost of goods sold down to $1 instead of $1.75, that's going to help. But as far as I've seen from Tilray, they're not going to go very far. Most of the people that are in charge at Tilray haven't ever used cannabis. They don't know the industry. At some point, it's going to be a consumer product good, and I understand that. But for right now, for industry movers, first mover advantages, I think you need to understand the industry a little bit more. And Brandon Kennedy doesn't know anything about cannabis or CBD. So I don't think that Tilray is going to survive. I don't think actually any of the LPs will. Initially, maybe through bankruptcy protection, I don't know. But there's going to be a lot of restructuring, and all of those individuals will be gone probably within the next 2 years is my guess. This is definitely the end of an exuberance era. Cannabis companies and investors have overextended themselves, driven by the exuberance. Last year, there was a lot of cutbacks from Weed Maps, Pax Labs, Ease, Hexo, CanTrust. So Pax Labs had a $420 million capital raise. I would expect that to go into litigation. Ease lost $166 million. All they're trying to do is deliver. Not really sure where all that money went. That was crazy. Weed Maps came out with a terrible excuse of the slow rollouts was the reason why they had to lay off all their salespeople. I'm just not buying that. And so let's take a look at Ease. They've got an industry insight cannabis report for the state of the industry. And so the key findings on the report included increased demand of consumption. In 2019, they saw a 74% increase in first-time deliveries. So the year of the older consumers on the platform, age 50 and above, they increased 105%. Boomers specifically purchased 67% more topicals in the previous year, demonstrating a willingness to try new cannabis form factors. The demographics and preference diversity there was a greater diversity among customers. Women on the platform grew 81% year over year, and product preferences diversified with a drop in topical purchase and increasing across all age groups. Product preferences diversified with drops in topical purchases increasing across all age groups. Neighborhood surprises: San Francisco, Nob Hill residents, they ordered more cannabis than their neighbors in the Haight-Ashbury area. Vape sales took a major hit, so confusion and concern around the tainted illicit market. Vape products caused consumers to turn away from the vapes. They're down 15% in October. So Ease is one of Snoop Dogg's investments, but at $166 million, they can't remain a going concern. Probably going to be going out of business here. There's some executives that say that this is a temporary speed bump in the quest to dominate a global industry worth hundreds of billions. I would tend to agree with that simply because as these companies go out of business, you're going to see a push already. So we're going to cover some price increases in both Washington and Oregon. You can see Oregon wholesale prices jump, and there's a temporary uptick in Washington State wholesale prices. And I think if you saw our prediction earlier in the year about what was going to happen in 2020, there was going to be a lot of companies going out of business in third quarter, squeezing all of that. And then there's going to be a pop in the fourth quarter. So that pop is going to be a result of companies going out of business, allowing some individuals to increase their price. But everyone is under a new microscope. So everyone's going to be looking at price and profitability. Are you going to be able to continue your operations from revenue? Because if you're not using your revenue to reinvest back into the company, investors aren't going to allow themselves and their shares to be diluted so that you can go out and collect more funds. Hexo, I think, just had $100 million from an institutional investor, so a bank essentially, had to prop them up. The only one that's doing halfway decent is Canopy Growth, and I'm not really sure that that's not a short squeeze. So there's about almost 30%. It's similar to Tesla from the short side. There's a lot of shorts. So 30% of Tesla is people betting against it. And the cannabis industry is no different. There's a lot of people betting against it, over $250 million on short positions. And so when these people cover their shorts, because they don't want to buy this security, the underlying stock, they want to keep shorting it. And so they'll cover their positions, giving that a temporary pop, call that a dead cat bounce. And so it's not really about fundamentals. This is about a long-term play. And so there's a lot of people betting against the exuberance of 2018. There was extraordinary capital investments, unrealistic business plans, a myopic focus on share price, which led to unrealistic hiring initiatives to spur further growth. Sadly, employees are all a casualty here. Everyone is expecting people to trim back and be a lot more lean. So there's going to be a reduction in sales and marketing expenses, staff layoffs, cutbacks on strategic spending, idling or underutilized production capacity. This Kentucky hemp company that filed $100 million in debt for bankruptcy, I looked at their Instagram page, and it's kind of funny because they spent a lot of money on booths. Most people have a 10 by 10, and yet when you look at this Instagram page, you could see that they had a 20 by 30 Normally, when you go to an expo or conference, you'll see companies that have a 10 by 10 booth. The really big ones that are doing very well and they're successful, they'll have a lot of great designs, a great booth. But seeing a 20 by 30 is generally a national brand. I've never heard of Gen Canna, to be honest with you. And yet you could see here, they're in the United Kingdom and they have at least a 20 by 30. I don't know if they had a booth in Switzerland, but they attended the International Cannabis Business Conference. Another large booth at the North Colorado Hemp Expo. This local event looks like another 20 by 30 or maybe even 20 by 50. And this 10 by 10 is a normal size. My point for bringing this up is because when you generate revenue, you can pay to go to international expos and conferences. When you have to take out debt so you can travel all around the world and promote your brand, that's an issue. You can't go into $100 million in debt as a farmer. You don't see farmers running around and trying to sell their stuff internationally. That's crazy. So there's a huge lack of accountability in this industry. I'm seeing all over the place. It's frightening to me how many investors will put money in and not even care if there's a CFO. As an investor, you want to know that somebody is taking care of finances. So there's no controller, there's no chief financial officer, there's no capital markets analyst. There's just a lot of volatility, people going out and doing what they think is right. And in my opinion, as a farmer, you can't go to Switzerland and international. What you need to do is focus on your hemp and then have that sell itself. Like if it can't sell itself, you're doing something wrong, which is why you went out of business. You spent all of this money on marketing and traveling around the world, pretending like your crop wasn't a part of agriculture. So this is an example of what not to do. And other farmers need to realize that you're growing an agricultural crop. This price of CBD is going to plummet. Whatever price you think you're going to get for CBG, CBN is short-lived. It's all just a commodity coming back down to reality. So grab your money while you can. But this is an example of what not to do in the industry as people are being laid off and capital is being wasted. I just see time and time again a huge lack of accountability where even the board of directors, if there are some, they're not able to control what's happening. It's pretty crazy. And it's happening all over, even in Canada, California, you name it, whether it's CBD or THC, massive amounts of absence from accountable stakeholders. So institutional investors like Bank of America are also more bearish than Wall Street. So certain levels of consensus around the woes of the cannabis industry in North America have seemed to be reached. So which companies will be the next to announce mass firings and how that'll frame a positive will remain to be seen. But one thing is clear, the cannabis industry is navigating tepid waters, and low-level employees are more often than not the ones paying the price of executives' mistakes and poor farming, as well as that of conflicting regulatory and slow policy evolution. So there's a necessary correction that needs to happen. While painful to many, especially those out of a job, layoffs are necessary evil in the cannabis industry's path to maturity, and many analysts and especially executives have argued. But acknowledging these layoffs are far from ideal. The attention to these well-known company layoffs of individuals is correlated with the amount of attention they received early for their ability to raise capital. So while the ability to raise capital is critical, it's not the only buy signal for a company in the long run. In fact, many of the stronger cannabis businesses from a fundamental standpoint have been heads down and focused on building and scaling without so much attention. We like to offer some solutions. So there's an article from MJ Business Daily about 10 tips to help cannabis business startups succeed. You have to come back to the Talking Hedge and find out. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.